All right, y'all. Appreciate y'all for getting on this Sunday, February the 8th. This is Day Traders versus the weekly outlook for the week of February 8th. Take a minute to look at the risk disclaimer. I don't want to go to jail, so I'm gonna have this added until I get my series, my FINRA series certification, so that way we can know that this is just an opinion. This is not to be used for actual taking sales or buys in the market. This is just for opinion and my thoughts. And if you do take any trades based off of what you see on my charts, please know that you're doing it at your own risk. All right, let's go ahead and get started. So today we'll start with the earnings release today. We got a lot of earnings today. We have a lot of names that I know because I'm in the IT space. So we got a lot of software SaaS companies that are reported. And then we got a lot of we got some banks, we got some healthcare companies. So on Monday, one of the companies that draw interest to me is Kyndryl. That's one that I'm gonna be looking at. Then going into Tuesday, we got Coca-Cola and Robinhood reporting. Coca-Cola on before the open, and then Robinhood after the open. And we also got Lyft, Spotify, Ford, Pfizer. Those are ones we want to pay attention to. Marriott, Cloudflare, another one we might want to pay attention to. Upstart. Then on Wednesday, we got Shopify, Cisco, Unify, Humana, McDonald's, T-Mobile, Fastly. That's one I trade options with a lot. Haven't I haven't looked at options this year. I don't like the flow right now of individual companies right now, and I also want to go ahead and finish up the rest of these funded accounts. So all of my focus right now, I did have one set up. I was waiting on BYD, and it's doing okay, but I'm not really focused on that. So I got between 3,100 and 4,900 on four more accounts that I need to finish to get the 300K combine finish on those, and that's where I'm going to stick to. Uh, so that'll bring me up to a total of seven different accounts I'll have, and that means more to me than trying to catch some individual option plays. But and then you can see on Thursday we got Coinbase, Pinterest. Interestingly, they just did like a 15% layoff. So the earnings that come out for Pinterest, if you are going to look for some option plays on that, pay attention to that. Be careful with that. And then we following up on Friday with Moderna is probably the biggest name on Friday. And then we'll need to kind of look out for any of the Mag 7 plays or whatnot going into next week. So let's look at what's going on from an economic standpoint. We didn't have NFP last week due to the temporary shutdown. So I'm assuming that they may do it this week. Let's see. Yep, Wednesday. Wednesday non-farm payroll change, non-farm employment change. So we should get that. We'll get that on Wednesday. So it looks like Wednesday and Friday might be our biggest days because we got CPI and we got the NFP numbers coming out on Wednesday. Nothing on Monday, so we should either be directional Monday or we should be directional or we should have earnings driving the move on Monday. Retail core retail sales, they're expecting 4.4%. Unemployment rate is 4.4. Now, and I unemployment rate, this unemployment rate measures the overall unemployment rate, but just for us individually as Black people in this country, this rate is actually double for us in particular. We're probably sitting around 8 to 8.5%, and really in actual reality, it's probably more along the lines of like 15, 12 to 15%. So pay attention to this for your own sake. And this should be understanding this and knowing this should be a wake up call for you guys and myself to know we need to go harder in this because can't nobody fire you from being a trader, right? Can't nobody take, anything away from you knowing that you can go in the market and extract money at your own will anytime you choose to. So just let that be a reminder, however this comes out, right? I'm assuming that this unemployment rate should be higher, and mainly because we have done a lot more layoffs. I think we've lost almost 2 million jobs within probably over a year time frame now. So just keep that in mind. Unemployment claims previous 231, they're expecting the claims to be lower. We'll see what happens on this. And then core CPI is coming in at 0.2% previously. 0.3% is the forecast, meaning the prices have increased for consumer products. And they're expecting it to go up 0.1%. And overall CPI to be at 2.5%. So slowing in it's still increased, but slowing in the increase. That will actually, if it comes in at 2.5, that'll be good for the market. So we'll have to keep an eye on that, right? And just looking at what we had last week, on the midweek outlook, just looking at those setups that we had and just how they played out. Wednesday was, let's start with Wednesday here. We had, what is this one? This one was NQ. NQ, yeah, we took NQ. We took this low. So this setup was that if we take out this low, the weekly low, we would trade into this price gap from the daily. And then once we get down there, we should get a 1-2 rejection, and we should get the 2-3, and then we should get a 3-4, and then we should get the 4-5 right below the weekly low. And if at the 1-2 or the 3-4, we could possibly see the market push up from there. And if we go back and look at NQ, that's exactly what happened, right? So I'm gonna start with NQ. And you can see this was that low right here. We took the low, we bounced off of the price gap. We pushed up again. This was our push to the downside. This was our 1-2. We actually pierced it a little bit, and then we pushed up, and then we pushed up higher, right? And we actually took out the highs above here. So going into next week, I'm gonna be looking for us probably to either go sideways or we get a continuation to the upside, right? And if we I'm thinking that they might be using this as a catalyst to push higher, but I won't actually really be strong to the buy side until I see one or two things, right? I want to see us trade back into this price gap and try to hold it again. And if we don't trade back into the price gap, then I won't really start looking for buys. If we take this high from Friday out, I want to see how we respond to this. This is a low time frame inverted fair value gap. Lower time frame fair value gap. If we invert this and go into this last week gap right here and start holding above, that's when I'll really take the buy serious, because that means we're coming back above the weekly and the monthly. And then we're going to start to try to see if we're going to hold. So the setup that I'm looking for is this. Let me pull that setup out of here. Weekly outlook. That was NQ. I'm going to drop this chart. Let me get the chat open. So interesting that I'm starting with in Q, but that was the last chart that I traded. I actually traded NAS on Friday, and we can go over that setup if you want to too. It was one that I should have stayed in, but I had to go do a couple things, like go get my car out the shop, and it was a little choppy, so I didn't stay in it. But I wish I had have. I did manage to make 200 out of it, but I could have made a lot more than that on that trade. And then here's S&P. S&P, I'm not gonna S&P and NAS were basically the same setup, just different things to consider, right? So that was our Wednesday. We pushed down. This was the low we wanted to take out. It took it out. We swept it. We swept the previous month low. We tried to do a 1-2 right here. It failed, and then we got our 2-3 to take us below this previous week low. And then on that Wednesday into Thursday, we gapped open. And so my logic was that if we are going to be at the 4-3-4 move, we could see a bounce there. And if we did, we would need to invert this new day opening gap right here, which you can see once we traded into it, we put an order block right here at the low, and then we held in the middle of it and then push higher. That's how you want to see price respond to something that is about to invert, right? If this should have been bearish because we gapped to the downside, but instead it inverted it. And instead of selling off right there and trying to sell right here, where we should have been selling right here, and then we should have been taking this low. Instead, we held inside of it and we traded above it. And this became the order block that they used to push us up higher, right? That's a good sign that you can use to see if something is about to be turned from bullish to bearish or bearish to bullish. When you start seeing stuff happen like that, that's a good sign, that is gonna flip, right? Okay, so in our case, going into the market on this week, it's the same situation, right? We've managed to set equal highs inside of a fair value gap from the 4 hour, and it's a pretty big one too. So this will need to we'll need to either trade inside of this fair value gap and invert it, and it should be similar to how this responded, where we trade at the middle, we hold in the middle, and we order block somewhere around the middle or the low, and we use that order block to take us above this 4 hour fair value gap high and above the previous week high and all-time high. It should look just like this. So if you understand this, this is what you want to look for inside of here. And then, you know, we're already above the yearly. If we do get this downside move, don't really, just like I said about it, like I really would rather for us to come down and then buy. That'll be clean and healthy. But if we just get one-sided trading, look for, if we don't just take out this high and hold inside of here, the other thing to really look out and consider is this has been inverted already once we traded through it over here, right? This should have sold. You can see the wicks inside of that tried to sell us, and we got the yearly opening price right here. So for us to really consider sales to the downside right now, we need to see that this get traded back below and the yearly. So don't take a heavy sales in the market right now, because it's gonna be, it's gonna be opportunities for you to sell, but take your money out of those trades and don't go too heavy on those trades, right? If you see a sell off, consider it likely a move to the upside, right? They selling the market to buy it back up. That's how I want you to interpret that, right? So if we get the 0 to 1 and we push up and we push down to the one and we make the 1 to 2 move, we may be trying to buy from here. So, or we may do a 2-3 and we may be trying to buy from this order block. And we could see a bounce at the 3-4 level, at the 4 or the 5. We can see the bounce at the 3-4. We can see the bounce at the 1, or we can see the bounce at the 3 or the 5. So just pay attention to that, right? And pay attention to what economic news is telling us, right? So I want to see us if we do just push up though, we'll of course take out these highs. I want to see price hold around the middle, hold around 69.78, and then there should be an order block right around this midpoint, right? And once we make the 1, the 3 will be the determining factor as to whether or not we are going to sell off from here, or are we going to sell off and just hold inside of here to go higher, right? So that's what I want us to consider going into next week, right? This is in Q. I already got the chart. So, yep, it's the same. Let me go back over here to my Airtable and give you the chart from here. And just basically my notes are just saying the same thing. I probably can just go over my notes on this. And just my notes. To stay bullish, we need to hold above the 4-hour bearish fair value gap, which that's what I mentioned. We need to invert the range and get in above the 4-hour fair value gap medium. That's that one that I mentioned above. Holding would be likely the move once inside, holding above these levels. There is a small 1-hour inverted fair value gap that's sitting at the yearly, and that level would be support. That's something we want to see. That's the one I mentioned as well. And let me see if I missed anything. The bearish move would need to come below the yearly opening price and that inverted fair value gap range. And there's a 1-hour fair order block that is immediate downside target. Yep. So yep, didn't miss anything on that. Let's look at so that's NQ, S&P, YM looks a little different. You'll notice YM looks a little different. YM had already taken the all-time high. YM that's what this path is, previous all-time high. It had already taken it. It took it first. So YM has taken the all-time high. S&P actually took it before Dow did, right? But S&P is probably about to make another all-time high in line with this high that Dow just took out, right? And in this case, we created a new fair value gap. It's huge, right? It's really, really huge. And there's multiple. So in this case, let's go to the actual chart for this one and look at that, what that one looks like, right? So you can see this was a fair value gap. And this one we used to hold us up for quite some time. So this is my downside target. So if we come down, I'm thinking that we hold around this area, which is also that 4-hour fair value gap, the bullish fair value gap. But you can see there is multiple fair value gaps, multiple engulfing candles starting now here, 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 and there's probably about to be one up there. So instead of like trying to individually draw those out, we'll just take the whole range. Where this is the last up candle, that's the high. We're hitting the 50,000 mark on this. And so now we break this whole range down into these 4 quadrants where you got the lower thirds, middle, upper third, and high, right? So for me, the way I want to see this move is the first place I want to see is how we respond to the high and how we respond to the all-time high. If we just push through the all-time high, now we're in new chart area. So now you got to go with whole numbers, right? So our first real whole number is outside of that, we're at 50,000. The next big whole number, let's say 50,500. That's right around where the one should come in at. If we get a retracement, our retracement should be near or at the all-time high, somewhere around that range, or are we going to sell off, right? Then if we get a 2-3, the next price point to consider above that is right around the 650 to 650 to 700 area, and in reference, what I'm mentioning is 50,650 to 50,700 area, and we should get our three printed. And again, if we get the three, our 3-4 should either push down and bounce, or we get a sell off from there. And then if neither of those, if the 3-4 holds, it's probably going to hold around our one. And then if that pushes up, that 4-5 move takes us likely to 50,800 to 900 area, or roughly 51,000 area, which is just above here, right? This is just above. So anywhere in between 50,800 to 51,000 would be where I would be looking for us to push to. Then if we sell off at the 1 or the 3, we'll still need to consider our downside targets, right? Where if we push down, we need to see how we respond to the high, right? If we can't get a bounce from there on the 1-2 move, the 1-2 gives us a 2-3, at least down to right around the old previous high, and this upper third right around 49,769 area. If we do want to go lower and we get the 4-3 bounce and the 4-5 bounce rejection, then I see us coming down to try to get inside of this inverted fair value gap range near the 49,508 area, which is the middle of the bullish fair value gap. And then again, we could also see a bounce off the 5 area. So that's what I'm gonna be looking for Dow. The chart is here. Let's give you guys this chart. And then we'll look at the VIX. VIX was one-sided on Friday, and the VIX has a inverted fair value gap. We don't have a lot of liquidity on the upside within this move from this high down to this low. We don't have a lot of liquidity in it, but we got a lot of price imbalance. And what I didn't put in this image is there's a 4-hour fair value gap. So this up move is gonna need, if we're gonna push up on VIX, this lines up with the indices pushing down. If we push up, if we go ahead and take this low, this lines up with indices pushing higher, right? So if we want to see indices push up, we need to take this low from Friday, and then there's a small bullish fair value gap that we should get the 0 to 1 move to the downside. Now, once we get into that, that's where we can see the bounce from. And that's going to be the first chance we see if we get a retracement on the indices, right? If we get a retracement to the downside that would set up another buy, we need to see the 2-3 move take place on the VIX. And then that's when we should take out last week lows and this previous week low, and then even coming down to challenge the yearly opening price down here roughly around 1460 area to take out this previous week low. If by chance we decide that we are going to be pushing up on VIX, then we should start seeing heavier sell-offs on the indices, right? Which could happen because we got a lot of economic news. And if we get some economic news that doesn't respond well, this could lead us up into this fair value gap slash inverted fair value gap. And then you'll start seeing us hold inside of this low. You'll see us place order block around the low or the middle. And then you'll start seeing us use that order block to push us higher and through the highs of these inverted fair value gaps and 4 hour order block, 4 hour fair value gaps. So that's what I'm looking at for VIX, right? And then, of course, if we get to the 1 or the 3 on the up move, we could see rejections there. Just like if we get to the 1 or the 3 in the down move, the 1 to 3 or the 5, we can see rejections there from both sides, right? So my best case rejection for the downside move is at this little small fair value gap. That's the first place we should see rejection. The 3, we'll see rejections. If we see rejections here, there will be just sweeping liquidity, and we'll just need to see price come back and trade and hold above this area. But these two are most high probability areas of rejection. The 3 on the upside, the 1 on the downside. So let me send you this chart. Let's send you this chart. Let me make sure we get the right one. Let me just make sure this one is the right one. Okay. I had a couple edits to that one, so that's why I got a multiple in there. Okay, that's VIX. Then we'll look at gold. Let's look at dollar first. We'll look at dollar first, then we'll look at gold. All right, so on the first thing in gold, I mean dollar, if we stay bearish, I want to see us take out the previous day low. And if we go bullish, I want to see us take the 4 hour fair value gap to the downside and invert it, right? And that's will put us above the previous week high. So that's the synopsis of what I'm seeing on dollar, right? Simple it, right? So this in fair value gap to the downside, for us to do a up and push higher, we need to invert this and we need to push through this and above it to take out this swing high right here. And then once we get above this swing high, we need to use this range that we created here. And then we need to see price trade off of it. Where worst case scenario, we come down into it and then we bounce with our 2 and then we push higher, where we'll then eventually take out the high from last week. And then we need to see, like, hey, if we do a 3-4, we hold, and then a 4-5 will push us higher and get us right back around this yearly opening price, and then the high of this daily fair value gap. Because at that point, we would have inverted the daily fair value gap, right? And just like I told you, if we invert in a fair value gap, right, it needs to start once we get in the low, right? So once we get to the low, this is when we trade it back into it, right? And then we see an order block right here. This is happening at the lower quadrant, right? And then the main move pushes us above that, and we start to go to the next quadrant, right? That's the middle. And then at the middle, you need to see order block again. Then that's this one. And then we got this one too. This is going to be an order block if we go higher. We need to start seeing price use that from there to hold us up to go higher. And then maybe when we come around here, we'll see another one around here, around this level. And then we'll need to see price push above that, come back down, use it again, and then this will be completely inverted at that point, right? That's what it's going to look like a staircase, to keep us higher. And they use the order blocks and the fair value gaps to expand those moves So that's what I'm looking for dollar. If we go up, if we go down, right, we need to take out this previous day low, respond to this fair value gap that's bearish, and sell off from there. And then we take this low, we take this low, and we take these lows. And this is like the main target that I'm looking for over here is these lows that are near this low, the fair value gap low. And then once we get in there, once we get down there, there is a fair value gap right here that's bullish near the low. One setup that I really like to trade is when I see fair value gap and swing lows inside of it, right? These lows are inside of this fair value gap. And I like to see price do whatever it's going to do above here, push up from there, come back down, and reject to go higher. It sweeps this liquidity inside of this fair value gap and then bounce. And we got a great setup lining up if we get this behavior that will happen right around the week from the weekly and monthly opening price, the weekly opening from last week and the monthly opening price. That is a good area for us to come down to and try to hold, because the monthly, us rejecting the monthly is always a setup that you can look for in most cases if we're trending in them. So this one I'm looking for on dollar. And best case, if we get a bounce, that's why I'm looking at the bounce from the 3 on the downside or the 5, 3 or the 5 to get a bounce from. And then on this move to the upside, I also like the 5 on this one as well. So because the 5 will put us near or at or near the yearly opening price. So if we start to push up, the logical place for us to get a really good rejection is the yearly opening price that lines up with the fair value, the daily fair value gap high. So combining those together gives a strong area of potential resistance. So we'll look at those two for our bounce, right? So that's dollar, right? Then let me drop this one in the chat. And the last one we'll look at is gold. We were just talking about it before the call started. Gold, 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 gold. Be careful with gold right now. This has been very volatile, but again, just reading over my notes right quick. To stay bullish, we need to trade through a 4-hour bearish fair value gap and invert it to take out the previous week high. We will likely retest the area and move higher from there and target the 4-hour bearish fair value gap above, right? So if we get above the 4-hour fair value gap that I'm about to show you, that and we start trading above the previous week high, the only thing that we have above that area is the 4-hour fair value gap. And, there's also a daily order block as well. So that's probably where we'll target, right? To turn bearish at some point, we need to trade through. There's a 1-hour order block that we would need to trade through because that could hold as support, right? Price would need to push through the 1-hour order block and continue lower, and below there's a daily fair value gap low. So let me show you what that would look like, right? So in this case, we had such a strong move up, right? And then this is that fair value gap that I mentioned that's just also in line with this previous day high. And we're sitting right around the middle right now on the price. When we closed on Friday, there's the 1-hour order block to the downside. That is lining up with the weekly/monthly opening price from last week. And then, like I said, if we're going to actually sell off, we need to come through and trade through below this order block and the monthly low, and then continue to go lower, right? From a downside perspective, targets would be previous day low, this swing low. And really, if we come down here anywhere near this swing low, we'll probably come down into this old inverted fair value gap, right? That's the downside, right? And again, also in line with this order block, it's the low of the daily fair value gap, which is 49.05. So we would need to be trading back below this to go further. So it would take for us to get through this in order to go ahead and start to get reach for that, the 5 and the 3 to get to that point, right? I'm seeing that we will likely be bullish just because of where we close. Only basing this off of where we close. We set the high near the close of the day on Friday. So on the open, this previous day high from Friday is at risk already for us to take that out immediately, right? Then we should see price respond to and right around the daily fair value gap midpoint and above this high. So if we get this 0 to 1, that should take us above these highs and for the previous day high and maybe even the previous week high over here. And then we'll need to kind of respond to this bearish fair value gap because we would have inverted it at that point. Then we can show again, we should start seeing price hold around this 5130 area, the previous week high. That's the high of this daily fair value gap that we're stuck inside of right now. And then right above it is this 4-hour fair value gap. It's small, but it's right here. And really, I could draw it out this whole range, but that's okay. We got enough information. So once we get above that, you can see there's balanced price throughout this area right here. So if we get above this high, we are likely going to stop inside of here before we get any kind of response because this is all balanced price throughout this area in between where this high is and this order block. I mean, fair value gap right here. So this is all this area in between is balanced price. So getting a 1 or a 3 here without us getting to this area is probably something that's a little lower probability. I would think that the 5 would be the first area we get rejection from. So that's the upside cause for us on gold. But overall, we're still like in a range. Right now, you can see we ranging short term between this low and this high. And if we get this move to the upside, this will take us out of this short term range for now. So let's just play it by ear. We got a lot of news going in this week. And again, this is going to be NFP week, even though it was supposed to be last week. They didn't release it because of the shutdown. So that is the last one. Anybody got any questions or something they want me to cover? Because if not,
No, I think I'm good because I marked up ES1 pretty much the same way you marked up yours. And I was just gonna wait for the open account on button to see which direction it's gonna take
okay.
on that one. So everything you marked up looked pretty much on the spot. So
Okay. Okay. And again, be careful this week. Manage your trades properly. Take your time getting into your trades and you guys know that you can reach out to me. I want you guys to especially the new people, if you got your charts, when I post the charts up, please throw your charts on there. I just want to see what you got. Like even if I don't say nothing, I always look at it. I just want to see where you are in this process and in the journey. So, just throw it up there and just let me know because I just want to see. I want to see where y'all coming in at. So, on that note, I hope you guys have a good trading week this week and good luck with all your trades. And I'll catch y'all on the next call on Wednesday. All right.
All right, man. Appreciate it.
Appreciate it, brother. Later, Shanika.